What if I told you that the two most powerful names in American banking were never meant to be competitors, but rather two distinct visions of financial influence that ended up shaping the modern economy itself? On one side, we have JPMorgan Chase, a behemoth often described as the bank of banks, with roots that trace back to the man who bailed out the US government during a financial panic in the early 1900s. On the other side, there's Goldman Sachs, the archetype of Wall Street ambition. Born as a small trading partnership that evolved into the most feared and admired investment bank in the world. Their rivalry is not just about money. It's about philosophy, reputation, and control over the very arteries of the global economy. Let's rewind the story. In the late 19th and early 20th centuries, banking wasn't just about holding deposits or offering loans. It was about who could control the gears of industrial expansion, who could rescue governments when currencies collapsed, and who could connect powerful investors with the capital they craved. Enter John Pierpont Morgan. He was no ordinary banker. When markets crashed in 1907, it wasn't the federal government that saved Wall Street. It was J.P. Morgan himself, locking fellow financiers in a library and forcing them to inject liquidity into the system. This act cemented the legend of Morgan as a stabilizer of capitalism. Decades later, his legacy morphed into JPMorgan Chase, now the largest bank in the United States, with over $3.9 trillion in assets under management. That's more than the GDP of entire nations. Goldman Sachs, meanwhile, took a different path, founded in 1869 by Marcus Goldman. The firm started as a humble commercial paper business in New York. Instead of lending its own money like Morgan did, Goldman specialized in connecting companies that needed cash with investors who had it. By the 20th century, Goldman had become the ultimate middleman of capitalism, mastering the art of underwriting securities and taking companies public. If you've heard of IPOs, initial public offerings, you can thank Goldman Sachs for turning that into a global phenomenon. From Ford Motor Company to Apple, countless giants have leaned on Goldman to access public markets. So, here we have two contrasting dynasties. JPMorgan built power through sheer scale and dominance in traditional banking. Goldman Sachs built power by being nimble, by inserting itself into the deals that defined industries. One was about stability, the other about opportunity. But both became synonymous with influence, the kind of influence that shapes policy, steers markets, and even whispers in the ears of presidents. And here's where things get fascinating. While JP Morgan is often seen as the steady hand of American banking, Goldman Sachs has cultivated a reputation as a kingmaker. Its alumni don't just stay in finance. They infiltrate government, from U.S. Treasury secretaries to European central bank officials. Some critics call it the Goldman government because of how many former executives end up in positions of global power. That raises an unsettling question. Is Goldman Sachs more than just a bank? Is it, in fact, a shadow network of influence operating at the highest levels of decision-making? Meanwhile, JP Morgan's power is less glamorous, but arguably more entrenched. As the largest lender and one of the most systemically important institutions on Earth, it has been described as too big to fail and even too big to manage. In 2008, during the financial crisis, it wasn't Goldman Sachs that absorbed failing banks. It was JP Morgan, stepping in to acquire Bear Stearns and Washington Mutual. When governments and regulators needed a fortress of stability, they turned to JP Morgan. When corporations needed strategic advice or to raise billions on Wall Street, they turned to Goldman Sachs. This sets up an extraordinary rivalry: stability versus agility, fortress versus dealmaker, Main Street versus Wall Street. Both claim to hold the keys to financial power, but in very different ways. And as we peel back the layers, you'll start to see that their influence goes far beyond quarterly earnings or stock market performance. It extends into politics, technology, even the way your savings account works. So let me ask you this. If you had to choose, which kind of power would you rather control? The immovable fortress of JP Morgan or the flexible global reach of Goldman Sachs? Share your thoughts in the comments. Your perspective matters. And if this comparison is interesting so far, hit that like button, because in part 2, we're diving deeper into the strengths and weaknesses that make each bank a financial giant. You'll discover shocking truths about risk, regulation, and why both banks are feared for very different reasons. Stay with me, because the story is just getting started. When you look at JPMorgan and Goldman Sachs today, it's tempting to see them both as indestructible financial titans. But every empire has cracks, and every strength comes with hidden vulnerabilities. Let's start with JPMorgan. JPMorgan is often called a fortress bank, and not without reason. Its balance sheet is massive, nearly $4 trillion in assets. It dominates consumer banking, corporate lending, asset management, and credit cards. Millions of Americans swipe a Chase card every day, and thousands of businesses depend on JPMorgan credit lines. That kind of diversification is a strength, insulating the bank from downturns in any single sector. When investment banking slows, consumer banking keeps the machine running. When markets stumble, JPMorgan's lending operations act as ballast. But here's the trade-off. Being a fortress comes with bureaucracy and size-related risks. Regulators watch JPMorgan like hawks because, in their own words, the bank is systemically important. If JPMorgan stumbles, the global financial system could tremble. That pressure means endless oversight, stress tests, and political scrutiny. Even Jamie Dimon, the charismatic CEO, who's led the bank for nearly 2 decades, has admitted that managing such a sprawling empire is a constant challenge. Some critics argue JPMorgan is simply too big to manage, that no leader, no matter how skilled, can truly oversee something so vast. Now let's switch to Goldman Sachs. If JPMorgan is a fortress, Goldman is a scalpel. Sleek, sharp, and designed to cut into opportunities others can't reach. Its strength lies in investment banking and trading, advising corporations on mergers, acquisitions, and IPOs, while also generating billions from trading securities. Goldman doesn't just watch markets, it bets on them. And historically, those bets have been very profitable. Goldman also has something JPMorgan can't quite replicate, a culture of elite dealmakers. Employees joke about the Goldman DNA, a blend of ambition, intelligence, and relentlessness. That culture has produced some of the most influential figures in finance and government. From former U.S. Treasury Secretary Henry Paulson to Mario Draghi, the former head of the European Central Bank, Goldman alumni are everywhere. This network of influence is both a strength and, at times, a liability. Because when Goldman faces scandals, as it did with the infamous 1MDB corruption case in Malaysia, that global visibility turns into a spotlight of criticism. So where JPMorgan's weakness is being too big, Goldman's weakness is being too exposed. It relies heavily on its reputation as the smartest bank in the room. If clients lose faith in that, the entire model wobbles. And unlike JPMorgan, Goldman lacks the same scale in consumer banking to provide a cushion during downturns. Its foray into consumer banking with Marcus, a digital lending platform, was meant to diversify revenue. But after billions in losses, the strategy has been scaled back, proving that Goldman's fortress walls are thinner than they appear. Here's another angle: risk appetite. JPMorgan tends to be more conservative, balancing its massive lending operations with measured exposure to markets. Goldman, by contrast, thrives on calculated risk. That's why during the 2008 financial crisis, Goldman was forced to transform itself into a bank holding company just to access emergency funding. JPMorgan, meanwhile, played the role of savior, absorbing collapsing banks and emerging stronger than ever. The crisis revealed something crucial. When times are good, Goldman shines. When times are bad, JPMorgan survives. But what about technology and innovation? JPMorgan has invested billions into digital banking, artificial intelligence, and cybersecurity. Its consumer-facing platforms are some of the most advanced in the industry. Goldman, meanwhile, leans into fintech partnerships, positioning itself at the cutting edge of digital markets and wealth management tools. Both are innovating, but in different arenas. JPMorgan for scale, Goldman for edge. So, what's the verdict so far? JPMorgan's strength is stability, diversification, and sheer size. Its weakness is the danger of being too big to control. Goldman's strength is agility, prestige, and elite networks. Its weakness is overexposure and dependence on reputation. Two giants with different armors, both vulnerable in their own ways. And here is a thought to sit with. Which is riskier, being so big that your fall could shake the world, or being so exposed that one scandal could destroy your credibility? Drop your thoughts in the comments because your perspective adds depth to this debate. If you're enjoying this breakdown, consider hitting that like button. It helps bring more eyes to discussions like this, because in part 3, we're moving beyond the balance sheets and into the real battleground. Adoption, global reach, and the race to define the future of finance. You'll see how JPMorgan and Goldman Sachs are no longer just banks. They're returning into something much bigger. In today's financial landscape, power is no longer measured by vaults filled with cash or the number of branches on Main Street. It's measured by reach, digital infrastructure, and influence over global markets. And in this new era, both JPMorgan and Goldman Sachs are racing to secure their place at the top. But they are running very different races. JPMorgan has become the world's financial utility. With operations in more than 100 countries, it serves everyone from families with checking accounts to multinational corporations trading across continents. Its presence in trade finance, foreign exchange, and cross-border payments makes it indispensable. When a Fortune 500 company wants to issue debt in Asia or hedge risks in Europe, JPMorgan is often the first call. But the bank is not stopping at traditional dominance. With Onyx, its blockchain division, and the creation of JPM Coin, it's positioning itself to control the flow of digital payments. This isn't theory. Billions have already moved through the system. The vision is clear. JPMorgan wants to be the backbone of money in both the physical and digital world. Goldman Sachs, by contrast, remains the scalpel. Its strength is not in scale, but in agility, influence, and networks. It has fewer branches, but more access to the corridors of power. Its alumni populate governments and central banks, creating what critics call the Goldman government. Its innovation strategy is selective, but sharp, pioneering IPOs, dominating mergers and acquisitions, and pushing into fintech and crypto advisory. While its consumer bank mark has struggled, Goldman's elite deal-making machine continues to thrive, and its foothold in digital assets shows that it intends to remain a player in the financial future. But every empire faces risks. JPMorgan's fortress size makes it too big to fail, but perhaps also too big to save. If it stumbled in a systemic crisis, the fallout would be global, far beyond what regulators could easily contain. Add cyber-attacks, political scrutiny, and the sheer challenge of managing nearly $4 trillion in assets, and the cracks become visible. Goldman Sachs' risks are different. Its brand is its shield, and reputations can crumble faster than balance sheets. The 1MDB scandal revealed how one misstep could cost billions and tarnish decades of trust. Without a vast consumer base as a buffer, Goldman is far more exposed to market cycles. When markets soar, it shines. When they collapse, it bleeds. Still, the opportunities ahead are enormous. For JPMorgan, it's about solidifying its role as the world's financial infrastructure, handling payments, lending, and investment flows in both traditional and digital economies. For Goldman, it's about reinvention, blending its reputation as the smartest advisor in the room with bold steps into digital finance and technology-driven services. And so we return to the question, who truly holds the real financial power? Is it JPMorgan, the fortress with unmatched scale? Or Goldman Sachs, the kingmaker whose influence reaches into governments and boardrooms worldwide? The answer may not be one or the other. Perhaps the future belongs to the bank that manages to balance both scale and influence, infrastructure, and agility. What's certain is that the power of these two banks is not abstract. It touches your life every day. The mortgage rates you pay, the strength of your retirement account, the stability of your currency, all are influenced by decisions made in JPMorgan's boardrooms and Goldman's deal-making halls. Their fingerprints are on the invisible levers of capitalism itself. So, let me ask you, in your eyes, which bank wields the greater power? JPMorgan with its fortress empire, or Goldman Sachs with its invisible network of influence? Share your thoughts in the comments, because your perspective matters. And if you enjoyed this deep dive into the hidden battles shaping our world, hit that like button and subscribe to Wealth Unlocked. Because the story of financial power doesn't end here. The next chapter is already unfolding.